Order blocks is S tier. See, I don't need vector candles anymore. That's the thing. I don't need vectors anymore. I don't need vectors anymore. Hopefully we get this on ETH. I don't need vectors, so D. I'm going to put vectors at D. RSI is D. No, we'll put vectors at C. RSI, okay, so okay. Order blocks is absolutely S tier. The way that we use order blocks is absolutely goated, man. Like it's not even close. Order blocks completely changed my trading. By far, not even by a little bit. By far, by far, by far. So absolutely 100% S tier. Vector candles I don't need anymore. Because I know where the inefficiency is. I know where my targets are. I know how to find liquidity. I don't really need it. Vector candles work well with market cipher. Vectors work well with market cipher upon entering, right? Like I use it if I'm going to enter aggressively, but for the most part these days I don't enter aggressively anyway. So vectors is definitely C. MACD I've never used, and MACD is just a shitty version of market cipher. And it's like, no. So MACD, I'm going to put D. RSI and MACD is trash. Both of those are in market cipher. Market cipher is better. If you're going to get one, you might as well get market cipher. And the problem that I have with the RSIs and the MACD, really any indicator, is that, and we've talked about this before, okay? So let's pull up the RSI. I don't even think I've ever in my life used the RSI. I swear to God, I don't even think I've used it. But the problem with the RSI and any other indicator like MACD or whatever is that you're limited to like plus 80 or minus. Oh my God, I just had a dream. I literally just remembered that I had a dream last night that market cipher went to like, you know how there's numbers on the side? Market cipher went to like 1,000. Like it was so impossible that it went there. Anyways, the problem that I have with these indicators, with these oscillators, let's just like, for the sake of ease, clear everything up. The problem with this RSI is that it must be, it's restricted within the confinements of what's available on the like axis of it, of like the y-axis here. So the RSI cannot go above, I don't know what the exact numbers are, but give or take, it can't go above or below this box. Okay, give or take. Let's say between 100 and 0. It can't go above or below. The problem with not being able to go above or below is that it could keep diverging. Like it could just hug the highs for as long as it wants to. And you would think that there are divergences in that it looks like it's ready to go down, but it just keeps hugging the high. And and this is what I've learned recently. It's not actually that it's hugging the high. It's not hugging the high. But based on the restriction of what is like in front of you, right? The piece of paper that's in front of you, the slate, you can't draw beyond the paper. So it looks like there are divergences when in reality, it's actually doing this. But you just can't see that because it's doing this. Right? Whereas something like your open interest, for example, is not fixed on the y-axis. Like there isn't a limit. There's no limit to how high or low this thing can go. You know, your scale is infinite in either direction. So if you want to see true divergences, open interest and CVD is your indicator. Because, and it's not even about it being a better or worse indicator. It's about the axis. Its axis, right? This can go infinite up and infinite down. Like, let's go to like the 3-day, for example. We're going to really exaggerate it. Look at how down, like 2 billion to 9 billion, whatever, right? Whereas if I were to do this on the RSI, it's not showing you that. It's still oscillating when in actuality it's like this. See the difference? So anyways, for that reason, RSI MACD is D. Hard fucking D. That's gay. Anyway, volume profile. I'm gonna put the volume profile as C because I think the volume profile can be good, but I think that it is good. I'm not saying it can be good. It is good. But also, you don't... Like, okay, man, I have a different opinion than everyone else about honestly everything, I swear. The thing about the volume profile is I don't trade the value areas directly. The point of control is good to know. I don't really trade the value areas, right? And if you pull up any range, if you pull up literally any range, let's say this box is your range, okay? 90% of the time, your value area is going to be somewhere here. Your point of control is going to be somewhere here. And your value area low is going to be somewhere here, okay? Sometimes the off chance, yeah, maybe it looks like this in the off chance. But most of the time, it's going to look like this. So that being said, I don't need a volume profile to tell me what's overbought and oversold. Just look at the range. When you're at the highs of the range, look for shorts. When you're at the lows, look for longs. So, you know, I don't do the whole... Yeah, you can say value area deviations, whatever, but I would argue that it's just rotating from the premium and the discount section of the range. So I would say that volume profile is a B. It's nothing crazy. Like, it's not that hard. Okay, breaker blocks are... Breaker blocks are good, and they're good in a very aggressive trend. I'm going to give breaker blocks a B. They're definitely not normal standard order blocks, but I'm going to give breakers a B. Fibs, I'm going to give a... You know what? I'm going to do breakers are A and fibs are B. Do I want fibs? No, fibs are C. Fibs are C. Fibs are C. Fibs are C. Fibs are C because 95% of the time that fibs work, it's because of a different point of interest, whether it was a liquidity grab or whether it was an order block. Like fibs are what, or order blocks are what fibs wish they were. Like this shit doesn't fucking work. It doesn't work. I'm sorry to say. You know, people, I think, hyper focus on fibs, but it's because the reason that they work is because you had a liquidity. You had liquidity that was generated below or above a fib, in my opinion, anyway. So, like, in this case, yeah, your fib would work, but is it the fib that worked, or is it because you swept liquidity? Right? Or, let's just say your structure was like this, and you had an order block here. Well, did your 786 hold because of the 786, or was it because of smart money involvement here? And to answer that perfectly, sometimes this happens, right? And then price will come down, and it'll bounce off of the order block. Damn, it's a good song. It'll bounce off the order block, right? Let's say it does this. Right? And then what happens is the next day, everybody goes on YouTube and they're like, look, it bounced perfectly off the 618 or the 786. Well, no, it didn't. It wicked out the 786. So it exactly didn't work. Like the 786 could not have worked less if it tried to. It bounced off the order block. The order block worked. So fibs are a little bit subjective also, because what they do is they just pull up the whole scale and then they're like, okay, well, they'll oh, it bounced off the 0.5. Like they'll just go find the number that it bounced off of and then they'll report it. Like it's so weird, man. Crypto YouTube is so weird. Anyway, so Fibs for that reason is a C. I wouldn't say, yeah, they're very relative. I wouldn't say it's yeah, bro, that's the best word. It's like you could pull it from here. You can pull it from here. You can pull it from here. You can pull it from here. It's nonsense. It's nonsense. Oh, I can refresh and add. Will it? Oh, wow. Okay, we're adding some stuff. Okay, cool. Okay. So, yeah. So, Fibs. Where did my Fib go? This? Fib is a C. Oh, I have 2 Fibs now. Okay, that's fine. Okay, open interest is probably an A. Open interest is an A. Vector candle we said was D. No, vector candles are C. Bollinger Bands are... I don't use Bollinger Bands as much as I probably should, but they're pretty good. I would say Bollinger Bands are... They're like A.5. They're like if there was something between A and B, that's where they would be. I don't want to quite give them A because they don't... I don't want to quite give them A because they... I don't use them. It's not... I don't use them as much as I should. So it's not that I don't want to give them A. They're probably A. Honestly, they're probably A. They're probably A. What is this? EMAs? EMAs is fucking F. EMAs are so garbage. They're nonsense. EMAs are what people that have no clue... Listen, some people with respect know what they're talking about, okay? But EMAs, all EMAs do are gauge momentum, which are indicators like market cipher, which we're going to get to, do anyway, right? EMAs are super subjective. It's the same thing with the Fibs, but it's even worse because they'll be like, oh, price bounced off of the 50 EMA on the 4-hour time frame. Like, did you know that? Or did you, after the fact, go and flip the time frames and find the EMA that it bounced off of so that you could report it on YouTube? Gain subscribers, gain people that, you know, are gullible into buying your course about talking about goofy shit. Like it held the EMA. Yeah, man, maybe it held the EMA, but did it hold it because of the EMA is the question. EMA is an F. If there was an F, I would give EMA F. I hate on EMAs, but I think EMAs are stupid. Sorry, Corey. Corey's coming for me. Corey's like, whole thing is EMAs. I'm sorry, Corey. I'm sorry, bro. Listen, okay. If you use it in the way that I said, right? If you like... I'm sorry, Corey. We love Corey. We love Corey. If you use it in the way... If you use it in the way that I said, which is like... I don't mean the Corey way, because Corey implemented EMAs with the way that I trade. So that's not what I'm talking about. Okay? And by the way, anything I say here, if it works for you, like, don't let my opinion influence it. I'm not hating on any other way to trade, but I'm saying my perspective of it. This is my tier list, right? Yeah, so Corey uses it as confluence. Other people use it as, like I said, oh, it bounced off the 200 EMA on the 1-hour time frame, which by the way is the 50 EMA on the 4-hour time frame if you didn't know. And they're like, oh yeah, it held it because of the EMA. It's not why it held it. It didn't hold it because of the EMA. Anyway, that's my opinion. So to each their own. Okay, VWAP. VWAP is like, okay, you know how I said that breaker blocks are what Fibs wish they were? VWAP is what EMAs wish it was. Wishes that it was. So EMA is cold hard F. VWAP, I would say, is probably... I'm going to give it a B. I think I'm going to give it a B. VWAP is a B. Do I want to give it a B? I'm going to give it a B for now. And then I'm going to like review my work and make adjustments. What is this one, bro? What is B? What is this? What is B trade? What is that? I don't know what that is. I don't know what this one is. You gotta tell me what that one is. Orb? It zooms in. What is orb? I don't even know what orb is. Orb? Yeah, I don't even know what orb is, bro. I have literally no idea what that even is. No, it's not order blocks. We had order blocks up here. This was order blocks. Oh, Orber blocks. Orber blocks. Okay. Orb. Yeah, open range breakout. I don't know what that is. I don't know what that is. So I'm going to just leave that on D because I don't know what it is. We'll just get it out of the way. Okay. Actually, we'll just keep it on nothing. Okay. And then now market cipher. Market cipher. So here's the thing with cipher. When you are trading cipher and you're using... Man, this is the thing with cipher, man. The answer's been in front of our faces the whole time. But we made it complicated. When you trade with market cipher and you are simply using basic strategy and basic strategy alone, I mean, fuck the divergences. Fuck everything else that we're trying to add and complicate it. Fuck the spike waves. Fuck the order of operations. Fuck everything that we tried to do to make market cipher better. And you just strip it down. You strip it down to basic strategy. You bring up market cipher. You hide the chart. Basic strategy. Right here. I don't know what happened. No, I'm gonna go back more because I don't want it to be like where we're at. Let's go on the 2-hour time frame. Let's look for just any momentum that is like obviously coming up or obviously coming down. Probably here. You probably had some divergence, but I want to find a better one. When you stick to just like, I want to find the most blatantly obvious like play. Let's go to the higher time frame. Let's go 8-hour. Man, I might get rid of the dots. The dots are actually really annoying. Oh my gosh. Let me see. How do I get rid of the dots? Ew. I don't know if I like that either. Can we change this? Oh my goodness. No, we don't want that. Anyways, when you use... Okay, this is probably something. When you use basic strategy and basic strategy alone on market cipher and you don't complicate it the way that they originally advertised it to be, it's an S. If you're crypto face and you can simplify it and not complicate it with all the shit that I taught you and all the other shit that all the other market cipher people taught you, if you do it in the way that crypto face does it, it's an S. If you don't, man, like, okay, I saved it for last for a reason. Here's the thing with cipher. There is something that I call cipher season. And you guys have heard me say that. And if I decide to post this on YouTube later, which I probably will, you know, you guys, I don't use the indicators as much as I used to, and I definitely don't give them as much weight as I used to, right? I do my analysis, and then I use market cipher as confluence with my entries only. But I do my analysis based on my analysis alone. Okay? There are seasons to market cipher, and there are ways to Like there are moments where you don't fucking entertain whatever market cipher is telling you. You don't listen to it, right? Like it's mad chop. When it's mad chop, it's not good. Like and that goes with any other indicator, right? Any oscillator, when there's chop, is not good. So you need to know when to like trust it, basically. When it's not cipher season, you shouldn't listen to the signals. If you know how to filter that out, then you let me know, because I haven't had a good opportunity to do that. And remember, the only flaw in it is that you're capped at plus whatever 90, plus 100, and minus 100. You are within this fixed area. That's its only flaw, I think. If you could see true divergences like you can on open interest, this would be S, like double S. But because of that reason, and because I personally am unable to decipher when to trust it, right? Like there are seasons to cipher. When it's not cipher season, if you trust that shit, you're gonna get fucking burned. And CryptoFace, for example, is really good at filtering out when to listen to it and when not to. I don't know how he's so good at it. I have no idea. And yes, I've asked him about it. I don't know how the fuck he does it, but that's my verdict on cipher. So that's why I saved it for last, because sometimes it's S, sometimes it's not good and there's mad chop and you need to just ignore it, and sometimes it's in the middle. So overall, I think I would have to give it, like I said, you know, the MACD and the RSI are what, the market cipher is what the MACD and the RSI wishes it was. Because of the money flow, I'm going to put it up at A. We're going to put it at A. But if I could, once I can bridge the gap between smart money and market cipher, which is what I'm working on, smart market cipher. It's like smart Hulk. I'm trying to combine the two. Once I can become smart Hulk, that's when this will be S, I think. But for now, I'm not CryptoFace, and I'm not as good as it as I'm not as good at it as good at market cipher as he is. So for me, for that reason, it's an A. When you're using basic strategy, when you're using it the way that I'm with divergences and shit, man, the divs don't div, dude. So sorry, the divs don't div. But when you're using basic strategy, it's an A. And once I can bridge the gap between smart money and market cipher, and I can make smart market cipher, and I can become smart Hulk of it, then it's going to be S. But until then, it's somewhere here. It's either A or B. Either A or B. In between, it's A.5. And that is my tier list. That is my tier list. That is my tier list. How are we doing on our trades? Sui Long is going well. Sui Long is going well. It's going not bad. Good. Good, good, good. Yeah, I think this is my lineup. Okay, no, we're gonna have to move some stuff around. This I don't need. There's 2 fibs. Okay, what was this? So RSI is hard D. Gay. MACD is D. EMAs is D. Shit's ass. Fib is C. Vector candles are C. The thing is like I use a lot of them together. You know what? No, I'm going to move this one. This is getting moved. Vector candles is B. We're going to move vector candles to B. We're going to move open interest to B. We're going to use VWAP to see. Okay, like VWAP is good. VWAP is good. VWAP is good, but I don't use it often. So yeah, VWAP is C for me. Bollinger Bands is A. Breaker Blocks is A. Market Cipher is A. I think Market Cipher B works, but only with low leverage traders. Yeah, well, Market Cipher is really good at like depicting a direction. So it depends on how you're interpreting it, right? It depends on how you interpret it. Like Market Cipher is really good at giving direction, and if you're following like basic strategy, it's really good. So it can help us structure traders have an idea as to where we're going to go. You know, if we're looking for Model 1 accumulations, for example, and you took the low, Market Cipher can give us a really good indication that that is going to actually be the bottom, and we can have confluence with that. But the thing with Market Cipher, and like any other oscillator, is it doesn't give you the exact low. Whereas your order blocks and liquidity, bro, if you can add liquidity, liquidity is an S. Liquidity is God tier. But yeah, that's the only thing. Like, you don't know where the low is, right? You know the general direction, but you can't gauge where the exact low is going to be. AKA, the shit could diverge 10 times if it wants to before it works. If there was liquidity and if there was a God tier, oh my goodness. Supply and demand is the same thing as breaker blocks. That's an S tier. So I'm going to create a new tier. In God tier is liquidity. Okay, God tier is liquidity. S is breaker and supply and demand. Smart money, obviously. A is breakers, Bollinger Bands, and cipher. B is volume, profile, vector candles, and open interest. C are fibs and VWAP. And then D is RSI, MACD, and EMAs. And that, my friends, is how the cookie crumbles. Did I have this wig on the whole time? That's my tier list. That's my tier list. That's my tier list.